Well, hi everyone, and welcome to the Buffett and Beyond Saturday Market Recap Letter, and this is April 22nd, 2023. And remember, folks, if you want to live on this beach like Jimmy Buffett, well, you've got to learn how to invest even better than Warren Buffett. And this week, well, the market seemed to have a volatile week as earnings season picked up steam, but actually the market went almost nowhere, except for Tesla, which showed us that down is still a direction that we have to be careful of. And this week we hear from the biggies leading the market, and that's Amazon, Alphabet, Meta, and Microsoft will give us direction for this market. We're going to show you why in a second. Now, the weekly stack analysis, we went over Viva, which is a company we think is going to double by the end of 2024. Reason is the price is the same as it was in 2019, but it is now making 2.5 times the earnings it made 4 years ago back in 2019. So this stock has room to run, folks. In our ETF video, we see that most of the ETFs that we follow are turning down, including the tech stocks and the semiconductors. And we look at the direction of the QQQs, which is a little bit ominous in here, folks, especially with all the big tech companies reporting this week. All right, now let's look at the S&P 500, and we can see, now this is the month of April, and we can see right here in April, right where we were, and we look across here, gee, almost to the penny, we're at the exact same spot with our close on Friday that we were on the very, very beginning of April. So, folks, this market has gone nowhere. However, look at this indicator down here, or intermediate term indicator, is that it is starting to turn down. It is very, very well, the blue line is sitting on that red line right there. So we have to be very, very careful in here. In other words, this is not the place to take on new positions. This is the place to be selling cover calls on some of those stocks that have some nice high premiums heading into earnings. And we did that this past week, and we came out very, very well on stocks that we sold cover calls on. And let us look at the QQQs. Again, the QQQs are sitting a little below. This is the 20-day moving average right in here. And, of course, those of you who have been following us know that the top red band and the bottom red band are volatility bands. We see the volatility closing up, and when it starts doing that, it means the market's going to move in one direction or the other. Then we come down here to our intermediate term indicator. It has already turned down. And folks, this is something we don't like to see, and I'm going to show you this chart but in the candlesticks in just a moment, and you're going to see what has me worried. So let's look at the S&P 500. Oh my gosh, is this a double top in here? And we don't like this situation here. And the green line is the 20-day exponential moving average. We're coming down to that. This is the 50-day moving average, the blue line, and the red line is the 200-day moving average. You could see we're above all moving averages, so that's a good thing. However, we're starting to see this indicator turn down here. Now, if we're looking at this as a double top, we're looking at this as a declining, almost a divergence from here to here, because this is where the market was at this point. This is where the market is at this point. So we can see the market, and we show this in our ETF letter. We show a lot of divergences taking place when it comes to advancing issues and declining issues. Advancing volume, declining volume. We see a lot of divergences going on there where this, and to put it in English, this rally in here is not as strong as this rally back here was when it comes to the stock market internals. And when we look at the QQQs, here we see this rally overshadowed this rally, so we have a line going up here, but when we come down here to this indicator, we have a line going down Plus, the black line has crossed over the red line. So this is the true divergence. This is where the divergence has really taken place. And with the 4 of our big 5 stocks reporting this week, and we're looking at Amazon, we're looking at Microsoft, we're looking at Meta, we're looking at Alphabet, which of course is we consider Google. Those 4 stocks reporting this week are going to send this market into a tizzy one way or the other. So, folks, we have to be very, very careful this week. And as we said, we're not taking on new positions here, and not even in Tesla. We're waiting for Tesla, and we'll probably go over that Monday or Tuesday. We're looking at Tesla to go down even further than it dropped this past week, which will present us with a much better buying opportunity. But this week we have to be defensive, and by being defensive, if we have a growth portfolio and we don't want to take profits on our, or we don't want to pay taxes on our profits, so we don't want to sell some stocks, we're selling covered calls and we're bringing in money in that way. And the QQQs here with this big divergence reaching a higher high over here, but reaching a lower high down here in this indicator. But we don't like that situation one bit. And portfolio protection, our April 21st SPY 410 put expired yesterday, and we bought the July 21st SPY 410 put. So we're out for 3 months. So whatever's going to happen in the market here over the next couple of weeks with the earnings, we really wanted to be protected in here, because when those indicators turn down, and I'm talking about the intermediate term indicator like this, when that turns down, we want to be protected. Now, some of you took your protection off as we were going up in here, which is fine, but then when that turns around, you want to be protected, or at least be selling cover calls on some of those stocks. Now, for some of you long-term investors who don't buy puts, who don't sell cover calls, you don't have to worry about it. You're fully invested and you're going to come out just fine. We're looking more at the shorter term in here, and that's what has us worried, because we're really heading into the meat of earnings season. So once again, we have put protection for those of you who use put protection, because now the market seems to be trending down. We could get a surprise to the downside. We could get a surprise to the upside, which would be nice. And then we don't have to worry about it. But you don't sometimes drive around without car insurance, and sometimes you do drive around with car insurance. You don't play that game that way. So those of you who want to stay fully protected, you're fully protected right now. So, folks, we had a do-nothing week this past week. Well, a little bit to the downside, especially in the QQQs. We've had a do-nothing month, even though it seems like the market was all over the place with the S&P. We closed on Friday right at where we opened in the beginning of April, so the market really has gone nowhere. It's gone every place, but it ended up nowhere. And we're waiting for the big tech companies this week, and Apple reports not this coming week, but the week after, in the beginning of May. So we'll see what happens. But don't forget, usually that with the last week of the month, we hit what they call the pit bull low, and then the market rallies into the weekend when we start, or the following week when we begin a new month with new money coming in. So hopefully this little decline that we're looking at or thinking about might be short in duration. We'll see. So, folks, don't think about it over the weekend. That's your playtime. That's your fun time. Sleep late. Be with your family. Forget about the market, because guess what? It'll be here on Monday, and it's going to be a whopping week, to be sure. All right, folks, have a good weekend. We'll see you back here next week.